Hello guys, welcome back to the CSA Forex channel. Today we're going to be looking at the FOMC news. We have the data scheduled for today, later today. And if you are not aware, the Federal Open Market Committee data, Fed, Jerome Powell, tends to be volatile. And if you switch over to the calendar, I'm just going to show you that quickly. So looking at the calendar for today, if you look very well today, which happens to be Tuesday, November 21st, you'll see apart from the CPI that we have for the CAD, right? That means that CAD should be volatile as well. But later on, by 8 p.m. for the US dollar, we have the FOMC meeting minutes, and it is bound to be explosive, right? So based on the dollar pairs, the major currency pairs, and gold, you need to be cautious with respect to how you're going to be trading, how you're going to be approaching the market. If you do not have any directional bias, I would advise you to be on the sidelines. I repeat, I would advise you to be on the sidelines. All right, so don't forget later today in the evening, just before New York close, we have the FOMC meeting minutes, and it's bound to be explosive. Now, if you look at the charts that we have right in front of us, let's first of all look at the dollar to see what the dollar has been doing up till now. It's a no-brainer from this hourly time frame that the dollar has been tanking, has been falling. So the question now is, what should we be expecting next? Now, this is based on the technicals, and we always say it's advisable to combine the technicals and the fundamentals together. Before you look at the technicals, look at the fundamentals to have a good enough idea if the market is going to be explosive and when it is going to be explosive, right? So we've already done that with the fundamentals, and we know prior to the FOMC meeting minutes at 8 p.m. later today, that the market is going to be explosive. So we need to tread with caution. Now, with that said, based on the technicals, what we would like to see is a pullback either to this area here, and then you look for shorts to take it back down, simply because the trend is down. And as a trend trader, it's always advisable to go with the trend. So as a trend trader, you will be looking forward to selling over here at these areas here that have acted as support but yet to act as resistance. So I'm looking forward to a pullback to the upside on the dollar, and then for it to drop some more, right? So this is the dollar, and you can always use the dollar to look at the other majors and even gold. So we're going to look at this based on the EURUSD now. If you switch over to the EURUSD, right, because this is more or less our go-to instrument. If you look at the EURUSD, you can see very much similar to the dollar that we looked at now, which is clearly an uptrend, right? Clearly an uptrend. And you can see that as an uptrend, right? This is where you would like to see price come back to, which happens to be an untested area, right? So this would be a trend move over here, TT, a trend move with the trend, right? That is trend trading. But if you look over here, it's an uptrend, and then we have what is known as a rising wedge. We have what is known as a rising wedge over here. If you look closely, even though my hands are not too straight, let me try and do that again, like this and like this as well. So we have what is known as a rising wedge, right? And you can see it's already closing up, and this one should pop very soon. So if you are a counter trend trader, you would obviously be looking for shorts over here, right, with the expectation of the price dropping down. And as it's dropping down, I actually have this area here marked as a demand area. So I'd like to see price come back to this point, and then peradventure we could get like price action trigger to take this back up. One thing I want to also tell traders now, because traders have this thought process that the market is over what? It's over, in this case, it's overbought. So it's when people say the market is overbought in an uptrend and then oversold in a downtrend. That means that it is time to reverse. Now let me make this clear. What goes up in this business can go up some more, and then what goes down can go down some more. right? So you need to be careful in saying it is time for the market to reverse. We know, yes, quite all right, we have the Fibonacci retracement traders that could do their drawings like this from the swing low here, the swing high over here, and then they say, oh, the market should come back to 38.2 or 50 or 61.8. And you can see over here, we have confluence here with this area of resistance and the 61.8. So we could be saying, oh, it's good for the market to come all the way back down to this place. Yes, it's possible, but at the same time, the trend still remains up. So it's best for you to follow the trend, right? Follow the trend, which is very key, very, very important for you as a trader. So trying to go against the market, you could do that, but also be careful that the market could bounce from this area of demand or even this area of untested support before pushing higher. Because if it's going to come all the way down to this point, obviously the market might also be, changing its directional bias as well, depending on how it moves, because it could move in patterns like this, or it could even just move straight down. Who knows? One thing also you need to be aware of that do not underestimate the market. The market can move anyhow at any time, right? So for me, based on my own analysis, based on what I'm looking out for today and today only, right? I would like to see the market come back to this area here, this area of demand, and then push higher. But then don't forget, what you want the market to do is is not entirely up to you. It's not up to you at all. It's up to the market. So you could just conduct your analysis and then wait for the market to do its own thing, right? So this is what I like to see. But then don't forget, we have the FOMC meeting minutes coming out at 8 p.m. So the market dynamics, the market structure can change at any point in time. Now I'm going to be rounding up over here. And of course, if you have any questions based on the FOMC meeting minutes that we have coming out later today, or based on this chart that we have just looked at, the EURUSD, right, the fiber, make sure to comment below. And of course, if you are new to this section, hit the subscribe button and turn on the notification bell. So I want to say thank you guys for joining me. I would obviously do an update on this video to show you what happened. It's all about conducting your analysis, and that's why you must always have a plan. So conduct your analysis, right? And then wait for the market to do what it wants to do, and then you take advantage. So this is what we have here, and this is where we're going to be leaving it for today, right? So thank you guys for tuning in. Catch you same time next video. Cheers.